Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Plenty for us to talk about as it relates to markets this week and market reports. But first, let's recap what happened this week with the numbers.
Yeah, if you look at where we were at in terms of cash prices this week, we really haven't gotten a lot of change. If we start on the cattle side, live cattle prices this week were basically unchanged from where they were last week. On the feeder cattle side, we did see feeder cattle 3 to 6 lower this week. On cattle futures, the live cattle futures for December was down $1.95, while that November feeder cattle futures contract was down nearly $3.60 this week. Moving to the beef side, the choice box beef price was down $1.59 this week, as we really had weakness across the board in a number of those components that make up the choice box beef price. Barrows and gilts, cash barrow and gilt prices were also basically unchanged for the week. The December lean hog futures contract was down $2.15, while the pork cutout value fell 98 cents this week, as weakness in hams and butts was not offset by what was a really good week in terms of belly prices.
Scott, as we take a look at those numbers, are we maybe starting to see some of that support on the cash side of things and hogs maybe dwindle a little bit? And how much does that whole uncertainty in the supply and demand game come into play there?
Yeah, so I do think maybe we are seeing some signs that things are changing a little bit. I guess we've had some things that were positive in terms of demand and supply factors, yet the overwhelming evidence is that we're continuing to build supplies of these meat products for the remainder of 2018, and that's going to continue. So I think that has had a lot to do with maybe some of that little more bearish news that we've seen this week.
Scott, let's get into reports. Monthly trade data came out this week, and really, I don't know if huge is a big enough word to describe how great August was for U.S. beef exports.
Yeah, when you look at where we are on both beef exports in particular, you know, we set a new record in August with the value topping $750 million for the first time ever. So we were up 7% from a year ago in terms of volume for August. If you look year to date, we're up 9% from year ago levels year to date. So it's really been a bright spot in terms of what's been happening on the cattle side. You know, we continue to see both South Korea and Japan extremely important in the kind of growth that we've seen on the beef side of the equation. Yet on the pork side, we were down 1% in terms of volume for August. That still leaves us year to date up 1%, and I'd remind us last year's volume was a record level. So, you know, up 1% January through August on a record from a year ago is nothing to get too concerned about. However, when you look at some of those in between or country level numbers, it reminds us that when you see somewhere like South Korea that up 40% in value, being the star for us, if you will, in August, yet when you look at what's been happening in Mexico, down 21% in value, you look at China down 32% in value, and you see some of the effects that tariffs have had in those markets.
Scott, I want to talk a little bit. We talk a lot about supply and demand issues. We had a question submitted this week talking about African swine fever and wanting to know if the outbreak of African swine fever that we saw in China and then we've seen subsequently in other countries could result in reduced consumption of pork. And what does that then potentially do for markets?
Yes, I really think there's a couple of facets to that question that we have to think about. So number one, do consumers turn away from pork because of the disease itself? And I think thus far we've seen the answer to that to be pretty much no, that they do understand it's not anything that's problematic for human health, so they really haven't shied away. However, if you get a large reduction in supplies of pork, let's say a major outbreak in China of African swine fever, I'm not sure they're going to be able to replace that lost production with imports from other countries. So consumption might fall, under that scenario. But I think when you look at the demand side, we won't see much demand effect as consumers might think about turning away because of the disease. So two important parts of that question to think through.
So I want to ask something on the flip side of that. If we've seen a lot of support in prices recently, a pretty decent gain in both futures and cash prices, maybe as demand certainty is shoring up a little bit. But if the African swine fever outbreak in China doesn't expand to be what it potentially could be, does that also result in us losing all of that recent market gain?
Yeah, it's a really good question. I think many of us are grappling with the answer to that. And I think it's really sorting out a couple of things that happened in particular in pork markets. Number one, as we saw slaughter runs down with the hurricane hitting North Carolina, I think that certainly provided some positive strength to prices, knowing that supplies were going to be a little tighter. Happening at the same time, we're starting to see those African swine fever cases in China and then also in Europe. I do think if we don't see a large effect from African swine fever in China, that certainly is a way to look for some downside risk in those markets, and we could adjust downward. I just keep reminding us that we've got fairly large runs of hogs left to deal with here for the remainder of 2018 and into early 2019.
And another jump into hog weights again this week. So I'm anticipating that to continue to carry over at least for a few more weeks.
Absolutely. Absolutely.
You mentioned there's a lot of downside risk that it really kind of dovetails nicely. WASDE came out this week. There weren't a lot of adjustments made to corn and soybean numbers. Does that potentially give producers an opportunity to lock in some input prices? We look ahead to feed costs for 2019.
Yeah, so perhaps it does. And I think most important, if you look at what we got out of WASDE, although not large changes, they tended to tighten those S&Us for corn and soybeans just a little bit. And if they continue to do that, that's the question. Where do we go from here in terms of corn yields and soybean yields? If they were to tighten those and prices were to move higher, so we might be in a situation where locking in some feed costs might make some sense. It won't be long before we'll get focused on what's happening in South America and what kind of crop is there that will be driving markets. So this might be a point in time to think about that feed cost side, especially just given how tight margins are going to be here for a while.
Anything else to take note of in this week's WASDE report?
Yeah, I do think it's important when you look at the livestock side in particular, just in what we saw in this report from where we were in September. USDA did revise downward for 2018 per capita meat consumption down about 1.4 pounds. That's a pretty good decline given we're sitting here in October of the year of 2018. So a number of months under our belt. It just reminds me that supplies have not been quite as large as maybe we would have thought or USDA would have thought earlier in the year. All else equal, that may provide a little more support to cattle and hog prices than we might have thought earlier. So maybe some good news in terms of that available supply situation.
All right, Scott, let's talk a little retail prices. How did things fare last month?
Yeah, if you look across the board for retail prices, they declined in September. The choice retail beef price was down 15 cents to $3.93 a pound for September. I just remind folks that's still 15 cents higher than where we were a year ago. So although we're coming down off some fairly high prices on the pork side, we were down 3 cents, fell to $3.79. That's 20 cents below where we were a year ago. So more weakness that we see on the pork side. And we'll probably finish here with the weakest of all. That composite retail chicken price was down 2 cents. Again, as we look at September to $1.86, we really struggle on what's happening with breast prices as they continue to be at historically low levels.
Scott, as we round out the reports for this week, consumer confidence, as we take a look at those numbers, we saw a slight decline this month.
Yeah, we did. So, if you look at that overall index of consumer sentiment for October, it was down 1.1% relative to the previous month. I look at the components of those things and say, the current economic condition down only 0.7% at 114.4, relative to what's the index of expectations going forward that sits at an 89.1 index or down 1.5%. Certainly seems like we're losing some expectations when you look at where that report came out for us. So we'll have to wait and see whether that's a precursor of maybe some weaker demand as we move into 2019.
Scott, anything else this week?
I think we've covered the major things for this week, Megan.
Looking ahead to next week, what reports are we watching for?
Well, we're really going to be paying attention to where cattle on feed comes out next Friday. That'll be the big mover, I think, for the week.
Well, we will have plenty to talk about then. Scott, have a great weekend.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.